I want to point out that Stephanie has gotten a new role at Apollo just last May to oversee wealth. And in that time, Apollo has hired 150 people nearly for her team. So with that many, that's a lot of people. With that many people, what is the goal here? It used to take $5 million, $10 million to get into a private equity fund, to get into a flagship fund.
Right.
How is that going to change?
Right. So, look, great to see you again. So when we think about the investors that are eligible for alternatives today, the landscape has changed pretty dramatically. So you're right. It used to be qualified purchasers, ultra high net worth only, and we still are focusing on their needs and solutions for them. But you can go all the way through to the mass affluent now. And there, you can subscribe for $2,500, point and click. Very different than the piles of paper that we used to see. So the spectrum of what we can offer to the ultra high net worth, the accredited investor through to the mass affluent has evolved meaningfully. And so when you look even at that semi-liquid kind of the private BDCs, the private REITs, instead of the 5 to 10 million of suitability, you're at 250,000. And the idea is to provide much greater access.
So this is a very large shift, and it's been happening for some time. You have Blackstone, you have KKR, you guys now really getting into this private high net worth segment. So what's available now, and what might be more available in the future in terms of what's going to be investable?
So if you look even at Apollo a year ago, and what a difference a year makes, we had 0 perpetual product. Plenty of more episodic opportunities, a wide range across strategies, but none that were perpetual. Now we already have 3. I think by the end of the year we'll have, my guess is about 6. And the range of what we can provide in terms of what investors are looking for has changed. So when you look at the markets today, and I know we've heard a lot about it throughout today's session, the clients, the financial advisors and their underlying clients are looking at rising interest rates. They're looking at the potential inflationary environment. We're looking at volatility. And ultimately, when we look at kind of the historical 60-40 model that people have relied on, it's challenged going forward. And so looking to alts as a tool is critical.
So how much of this is happening because of the environment that we're in, and how much of this is happening because if you look at where so much wealth has been created over time, so much of it has been in private markets and so many people have been left out?
Mm-hmm. Yeah, look, the democratization of alternatives is real, and being able to provide institutional quality opportunities to individuals through financial advisors is absolutely what we and certainly others are looking to do. The important part is in our view, alternatives is not just the traditional definition of private equity. And I know kind of historically it may have been kind of a more narrow definition. We think about alternatives as simply an alternative to public equity or public debt. And that's very important in this environment to be able to allow the investors to achieve their financial goals, whether that's saving for retirement or building wealth. This is a critical tool to help them get there. And the size of the market, which you're referring to, is practically double that of what we see in the institutional market, yet it's massively underallocated to alternatives. So there's a mismatch, and the products are
people
meeting their needs.
saying to you then, let's take the 60-40, a lot of this is not working, particularly that bond allocation, and saying let's give it to you instead?
They're looking for fixed income replacements. And in this type of backdrop that we mentioned, making sure, yes, that we work with them to find opportunities to fill that piece of their portfolio, as well as kind of reimagining what they can do with equity as well.
Well, the equity part of it is interesting because of the volatility that we've been seeing in the equity markets. Has that changed the conversation with clients at all in terms of seeking private equity opportunities relative to ones that are in the public markets?
Absolutely. So being able to deliver excess return at each point of the spectrum is our focus, and investors are absolutely looking to us to do that. And when you think about their pain points, we want to develop solutions that provide the diversification to alternatives in as efficient a way as possible, and offering it in a way that's highly aligned with how we invest our own capital. And so I think you'll see more and more of that going forward.
Well, I think that's another big question a lot of people who are entering the space have. When they're investing with Apollo, when they're investing with private asset managers, how are they treated as an individual vis-a-vis the big institutional investor, which has a lot of leverage when it comes to fees?
Look, our view is that historically, I think the fee arrangements were quite different from where we are today. And our view is, along the lines of efficiency, to make this as seamless as possible, including fees, and being quite fair in terms of the access and the price points for individual investors. So I think when you look at our products and that of the marketplace today, it's evolved in a very positive way for investors.
Now, going back to the types of products that are made available, this year, in 3 months, you raised, through the retail channel alone, about $2 billion in 3 months for a BDC. How does that compare? And you've been in this world your entire career, back at JP Morgan and now also at Apollo. How does that kind of fundraising for a private credit product compare to any type of fundraising you've really done before?
It's lightning speed. And I think it shows the demand that we're seeing from the financial advisors to be able to create yield in a defensive way. So when we look at the strategies that we're delivering, it's senior in the capital structure, it's floating in an interest rate environment, obviously that is rising, and it can create a very defensive role in a client's portfolio. So it is, from my experience, at record pace.
So how much is this also the kind of not just democratization of private assets, but this idea that I'm going to steal from Matt Brown over at Case, the idea that private assets, private equity funds can be as easy one day to invest in as a mutual fund?
Right. So we are big believers in that intersection of offering alternatives as well as the technology advancements. So you've seen our several investments that we've made in Motive Partners, in Figure, in Case and iCapital, and the idea is to make it easier and easier. And so that stack of paper that I referred to earlier, which is not necessarily an easy experience, is already getting more and more efficient through the use of technology. And I am a believer. I think it's a matter of when, not if, that it can be a simple click.
When you say a simple click, are you saying, one day you're going to be buying Apollo funds on your iPhone?
One day.
So, I mean, how long, this is not the Apollo that most people are used to. So how long does it take to transition to that kind of a future? And also, what role does financial technology play, given you've made such huge investments in so many fintech firms?
Yeah. Look, I think we're certainly focusing on it. I think the innovation and the great minds that are focused on this area will make advancements. Our view is to make sure that we partner with really forward-thinking members of the fintech community and those that are delivering great services today to investors, and just make sure that we are there as part of the evolution.
So another thing here I want to address is, we talked about the role of private equity and private credit when it comes to volatility. Yeah. It's not that there's no volatility in private markets. In fact, your money is locked up longer. So how do you protect against that? I mean, what are the warning signs that investors should be really looking out for when it comes to private markets?
Look, I think part of it is the basics of manager selection. I mean, we need to make sure they're obviously with managers that have been able to navigate cycles, and certainly at Apollo, that's something that we really pride ourselves on over kind of 30 years at this point. And it's making sure that, if it's more on the kind of fixed income replacement side, that the portfolio is akin to the risk you're looking to take in that piece of your portfolio. And from our perspective, there's a whole range, obviously, of risk and return. As I mentioned earlier, if you're looking at credit replacement versus equity, you're going to take a different approach. But our view is if you get the manager right, and it's someone that can be nimble and navigate the markets effectively, then you're not at the whim of liquidations or sales as you would in a public market environment. You can really pick your spots with entry and exit and make sure that you're maximizing value with someone that you trust to work on your behalf.
When it comes to manager selection too, you've done a lot of work, you've acquired Griffin here. How do you think about your work with the wirehouses and the RIAs out there?
Yeah, so look, partnerships for us across the wealth channel has been key to our strategy. So we have deep relationships with great momentum in the short period of time that we've made this really a strategic priority for the firm. The relationships run a long time, but the dedicated resources that we've built, as you said, from basically one a year ago to 150 today is a sign of our commitment for sure. So the spectrum is from wires and private banks to the independent broker-dealer channel. The acquisition of Griffin was a key part of that. And I think a distinguishing factor for us and kind of the range of relationships that we can interface with. Registered investment advisors, also a key element of our strategy. And you'll see us continue to enhance our family office resources as well. And we think of it globally, across US, Europe, and Asia.
You yourself came a while ago, 18 years ago, from JP Morgan to Apollo. But now, when you've hired those 150 people, they've come from Goldman, they've come from HSBC, they've come from Barings, they've come from T. Rowe, they've come from all over the industry. And I'm wondering if you have an idea of what this says about the way the industry is moving. Do you think that more talent is going to be moving into wealth, as well as private wealth more particularly?
Yeah, look, it's been fun, and the team that has come together is super talented, and so excited to kind of work together because the opportunity is massive. I think the ability to make sure that we're providing solutions for what investors are asking for, particularly now in this market environment where purchase price matters. I mean, you've seen the markets over a long period of time, and for the last decade, purchase price hasn't mattered because we've been in a bull market and all boats have been lifted. Thankfully, it's always been in our DNA. So as we approach this opportunity set for the global wealth channel, it feels like it's the absolute right time to bring a fabulous team together, which has been my privilege to be able to build, coupled with our capability as a firm at a time where purchase price matters.
This might also change the texture of Apollo's investor base. Last year, your CEO had mentioned that, or you had mentioned actually, that 30% or more over time of all new money that comes into Apollo can come from the global wealth channel. Last year was 5%. How much has it increased already?
So we have a lot of momentum, and it absolutely has increased. So we were at that 5% level last year. We're on track, given our pipeline for 22, to meet the kind of public goals that we've set out there, which from an AUM from wealth standpoint is multiples of where we were last year. And going forward, I stick to what I said at Investor Day, that I do think that the composition of our investor base could absolutely be 30% plus going forward from the wealth channel.
I want to be clear also that your investor base now is very global. And so when you're looking around the world, I'm wondering, where are you finding the investors that are most interested in private assets? Is there more interest in China, for example, than there is in the United States?
It's It's absolutely global. I mean, the interest from financial advisors that serve their clients, as well as the kind of ultra high net worth through family offices, et cetera, I would say it's a global footprint in terms of the interest that they have. US and Asia absolutely has shown meaningful kind of allocations. Many parts of Europe, though, the same. And a trend that we are seeing, like for the moment, I would say the majority of the products that are directed towards the wealth channel are global in nature and then offered to each of the respective regions. As you see kind of the opportunities develop, I think you will see more local to local. So opportunities in each of the respective regions offered to those clients within that region. And that's something that we're focused on as well.
Now, given a lot of those regions that you mentioned have so much uncertainty, so when you talk to those clients, when you talk to advisors in those regions, what are they most looking for in terms of their investments, and what role do you play there?
Yeah, so we're in a conversation for sure. I think what you find with Apollo in general is that while we have great expertise to offer, we also have a lot of humility in making sure we listen to what issues our investors are looking to solve. And at this time in the market, what we hear a lot of are some of the themes that we started to touch on earlier, which is how do you navigate the market of today with rates, with inflation, with kind of the volatility and expectations from public and equity and debt markets to be lower than obviously what has been experienced and seen historically. And so it's a great opportunity for us then to speak about how we can play a role in fixed income replacement and how we can reimagine how they allocate to equity by using alternatives. And that's a critical tool as they look to generate their return going forward.
Do you face questions at all about taking on risk in this environment when so many people are stepping back and just kind of holding on to cash?
So that's where the trust comes into play and finding the right manager to be able to navigate that. And scale is very important. So when we look at managers that have scale in a particular strategy and can see a range of investment opportunities across cycles and have the conviction to be able to make investments at the right time, exit kind of at an attractive time, that's where the investor looks to us.
So 18 years at Apollo, but 1 year on this job. So where do you see it going in the next year or so? What are your biggest goals kind of going into the next year?
Yeah. So look, we spoke a lot about the channels a bit earlier, and that's a key part, making sure that we have the right relationships with our partners in the financial advisory community. But the expectation, our commitment, is to deliver the best in-class client experience. And to us, that means delivering the firm, whether that's thought leadership and our views on the markets, our views on strategy, or even the kind of fundamentals of alternatives in a portfolio. We want to be that provider and that partner to them, as well as just making it as easy and efficient for them to invest in our strategies and continuing to innovate, because the innovation is in our DNA. And I do believe that you're going to see some revolutionized product come to wealth based on the resources that we're committing internally to bring that to the financial advisors.
I mean, I also have to say, too, I mean, this is a year where it's going to be a record year of fundraising for Apollo. Right. So are we going to see flagship products being brought out with a significant amount of, I think you said $2,500 investments?
It can be as low. And we have one interval fund, too, actually, that are focused in credit and in real estate already that allow for that type of access and suitability. From a flagship perspective, we do have our private equity flagship strategy out in market now, and our view is to make sure that it's accessible. That's part of what we're focused on, making sure that we take our institutional quality offerings across strategies and ensure that everyone from the ultra high net worth ultimately through to the mass affluent can have that experience.
It's definitely a new Apollo. Stephanie, thank you so much for your time, and thank you all for listening.
Thank you.